Alright, hello my fellow investors, it's the Intelligent Investor here. And before I start the video, if you like the video, please like, share, and subscribe. Please, I want to hit 5,000 subscribers. Once I do that, I'm going to start doing some giveaways. I'll probably be giving away free stocks and stuff like that, or free financial help. If you want to help me out in another way, please use the link in the description down below and sign up for Acorns. Acorns is honestly one of the ways that I think you should invest, and it's just a good little way to kind of start off if you don't have a lot of money. Sign up for Acorns. Also, you can use the other link to sign up for Robinhood if you don't have Robinhood. Robinhood, honestly, an amazing app to use for new traders, especially. I recommend it over Wable. I used Wable. I didn't like it. I'm taking out all my money from that account, and I'm not recommending it anymore. But I know I had a special video planned today, but I'm going to skip that and actually talk about GameStop. Now, GameStop is getting so much insane traction. People are telling me, should I jump into it at this price and stuff like that? I don't think you should right now. I made a lot of profit from GameStop, and people that kind of knew what was going up with GameStop knew why it was going to blow up. I did buy into it back when it was at $10. I sold it off at $18. Then I saw the whole thing about it, bought it up at $20, sold it off at today at I think I sold it at $122. Then it dropped down to like $85, and then I bought it and I sold it back here at $236. It jumped to like $241. I sold it at $236. I made a huge profit on GameStop. Now, why is this happening? Is GameStop actually doing really good? Is the company going to go up? All this good stuff? No, it's not. This is a reflection of a greedy company, and people, normal people, did some research, saw that the stock was shorted 100%, and it's going to have to bounce back. So, to quickly explain, if you guys don't know what a shortage is, in options, I'm going to show you here real quick. This kind of looks weird, but let's say you do a shortage in a stock. To quickly explain, I'm going to say you borrow $10 shares. I mean, $10 a share. You buy, let's say one, whatever. So you buy one at $10. You borrow that, and you're putting a short for $9. So for one share. So if you say this stock is going to drop $1 in the next week, then you borrow it at this, but you haven't paid anything yet. And if the stock drops to $9, then this is when you purchase it. So you purchase it at this price, so you make your dollar profit for the share. So the more you do, I mean, the minimum is usually 10 shares. So this would be 100, and your profit would be $10. So this is how shorting works. So what happened with GameStop is that GameStop was valued before, I think it was like around $50. And and this company is like, hey, the pandemic's happening, all this good stuff, let's short the stock. I mean, this has actually been happening for a few years, but the company's like, let's short the stock. So they kind of manipulated the market to short the stock. So they kept dropping it. So like, let's say they shorted it, they're like, it's going to hit 45. And then people started panicking, they started selling, and they're like, oh, let's gamble on this too. Let's short it to 40. So, it kept dropping, it kept dropping, it kept dropping, and they kept shorting the stock, which means they kept borrowing. And eventually the stock hit $3, right? Around $3. Now these guys in I forgot what they're called. They're in Reddit. Found that out. They saw that that they were shortage of they were shortage at 100%. So I mean, sorry, that's percent. They were shortage at 100%. So what that means is that eventually they were going to have to buy the stocks back, because like I said, the way it goes is you borrow it, and then at a certain time you think it's gonna hit a certain price, and that's when you actually put the money in, and that's when you do it. So because it was shorted at 100% at $3, that's where they were going to make their money. They were going to buy it back at around $3 and then make their money from there, because they would have made all those, all those shortages. So when people found that out, when these people were like, oh shit, this is at 100%, we should buy into it. So the stock started going up. So let's say the stock kept going up and up and up and up and up at $18. So then that company was forced to buy some. The stock went up. People started buying more, and they're forced to keep buying more. So the company kind of got screwed. So if you see a lot of things in the news that is saying like, oh, you know, these people are manipulating the market, they're not. They just outsmarted these dumb idiots that, you know, that cheated people off of money. You get me? And then they're saying, oh, well, CEOs have feelings. I saw this in CNBC or whatever the heck that is. And these people were like, oh, it's probably like Russian hacks or someone, foreign power trying to manipulate the market. That's stupid. It's none of that. They got outsmarted. That was it. You know, people saw that this stock was shorted at 100%, and they're like, they're going to have to buy back forcefully, because if not, then they're going to, you know, they're going to owe all that money. So they have to buy back. So knowing that, you know, they had to buy back, then that's when people like me and other people were like, hey, we're going to buy it at a cheap price, but these companies are going to have to keep buying more. So the more people started getting into it, normal people, like individual investors, the stock kept going up. Now the stock kept going up, and then they had to buy forcefully more shares, which shot up the stock. And then people like me sold, and then it kept dropping, and then I bought more, and then they had to wait to actually buy more because of the times that they were set. So it's like a whole complicated, confusing thing. And people are saying this is, you know, someone messing with the market and stuff like that. No, it's not. It's just these people caught it. They shared their information. People got that opinion and they made money from it. That's it. CEOs of mutual funds and stuff like that do this all the time. So if, like, let's say you mess up on something. So like, let's say a person bought NEO at $65 and it drops to like 59, and then you sell out of it. You losing those, what, $6 or $5, whatever, someone else is making it. So that's how it works. You lose money in the stock market, someone else is making it. Usually big mutual funds are the ones who are making that money. So, you know, again, they're making a big deal out of this because a lot of people are making money out of that company that's screwed up. And, you know, it's just a one-way thing. So they're like, oh, you can't screw a mutual fund because they're a big company and that's mean. But when they do it and they screw us or other people that have smaller accounts, not like them, from that, they don't say anything about that. You get me? So it's kind of stupid. And then they work on margin, you know? So again, they have to buy that because they work on margin. They have to pay the money back. They're buying in margin. We don't buy in margin. They do. So GameStop, again, is having this whole thing, you know, it's not going to be long term. So one thing that you can do is now you can short the stock as well. So this stock is going to collapse eventually. Once that company buys back everything they need to buy back, this stock is going to drop. It's going to collapse back to about $10 or even lower. So you can short the stock. So pay attention to that. That's where I'm going to be making money too. And I kind of want to tell you guys, if you guys know how to do it, you can short the stock when this stock collapses. So it's going to be pretty expensive, but I mean, you're going to be able to make big profits from this too. So just letting you know that this stock might shoot up a bit more just because, you know, it's being manipulated like crazy. Again, GameStop is not a good company right now. They're okay. They're not worth this price. So don't think that they're going to keep going up and GameStop is going to be a big giant again. No, it's not that. It's just this stock is being manipulated like crazy. And people are making money from that hedge fund that tried to screw everybody else over. So good thing they caught onto it. Good thing they shared their information. Thank them. I think it's called something bets or something like that on Reddit. They did good with this. They helped out a lot of people make some good money. And yeah, just keep an eye on that. Like I said, you can short the company, and again, what they were doing, you can do it because now you know that this stock is going to collapse eventually. So in the near future, by the way. So I'm just letting you know, kind of a little bit of the basis of it. So that's pretty much it, guys. If you guys like the video, like I said, please like, share, and subscribe. Share this video. If you guys want more videos like this and more of this information, please subscribe. Once I get 5,000 subscribers, like I said, I'll probably be giving away free stocks or doing stuff like that, and investing a little more time in the videos. So yeah, I mean, thank you guys very much. And yeah, just appreciate it. Hit the little bell so I post videos, try to post videos every day.